Welcome to Charts Today. My name's David Linton, and today's edition for Wednesday, the 23rd of February, comes to you from London. Market's looking a little bit perkier this morning. Of course, it's the initial reaction to Ukraine yesterday was, a worry and a lot of uncertainty, but we've seen markets just recovering a little bit. But the really big but is that the US stock market did activate the downside targets as we predicted yesterday. So we might see a little bit of respite today, but the reality is we have activated these downside targets by making new lower lows, and that shows up more clearly on the lagging line. Remember, these targets are generated from the close, so we are seeing now these downside potential. We might see a little bit of a recovery, but the reality is this downside pressure is there, and that is really, if you like, the lower high, the lower low, the lower high, the lower low. This is the characteristic of a downtrend. So we're seeing that we are in a new downtrend on the medium term for US equities. So let's take a look at the currencies first. Remembering this is my weekly, daily and 60-minute chart, my long-term, medium-term and short-term view of the market. And you can do this on any list, pretty well on any data source, of course. Just go to your data services menu, and in Updata you can just click all the data services that we're compatible with. So it really is powerful in that regard. So we're seeing here that the dollar is holding its strength, down a little bit this morning, but still bullish on all three time frames. The euro sitting at 113.45, so that's really quite key. Sterling sitting at 136, holding its strength and just nudging this 120 euro level against the euro, and again just gradually trending higher. Interest rate expectations driving things in the UK, of course. Bitcoin is up nearly 2%. Has been in a bearish trend, just starting to recover in the short term. Really looks like it's finding long-term cloud support. We've still got a target of 83,000. We just have to hold the 30,000 level, that previous low, in order for that not to be negated. Looking at the S&P 500 index, we're down 1%. Looks like the futures say that we'll recover a lot of that ground today, but the target is there. So that's really quite key. And that's some 16-17% lower. Watch the shorter term charts for any short term recovery, but the picture is changing very much for equities. It's not necessarily just the Russia-Ukraine situation, inflation fears, interest rate fears, so we're seeing lots of things working into that, and the Nasdaq downside potential is 26%. So tech stocks set for big falls. The futures are up this morning. The S&P future is up just under 1%, and the Nasdaq future is up just over 1%. The VIX volatility is in the high 20s. Above 30, we're really fearful. In the 20s, we're fearful. And below 20, we're less fearful. So the fear index, for the moment, is still bullish on the medium and short term, but we're back below that scary 30 level. Looking at the DAX, we are up 1% this morning. Germany recovering, but that 15,000 level, that critical level, has been breached. So the reality is that situation exists. So we just have to accept that. It is the German stock market is definitely on a downer now there, and that 15,000 level. Unless we can regain that, which I doubt we will, that's going to be quite key. Asia, we had Japan down a further 1.5%. Other markets recovering, the Hang Seng, Shanghai, Sensex a little bit up, but realistically, these markets are fairly flat given the falls we're seeing. We'll look at the energy mix in a minute. We're seeing some red on the screen there this morning. Looking at gold, sitting at 1891. You'll remember that about a month ago we kept talking about the 1800 level. Now we're going to talk about the 1900 level. That's the new critical level for gold. Above 1900 we're bullish. Below 1900 we are neutral. We wouldn't say we're bearish, but it's long term still looking very, very good for gold. And these targets to the upside are all in place. Even on the shorter term chart, we've got some big upside targets. Gold, of course, a potential beneficiary from any uncertainty that we see in the market. US 10-year yields recovering, just back to nudging 2%, waiting for this upside target to 2.7. to be activated on both those charts. Looking at the energy mix now, we've got Brent crude looking a little bit weaker this morning and just pulling back 0.5%, but the chart's still very much in bull territory. WTI, we were neutral this morning, just a little bit harder to read, and we had this downside target. We are just breaking the cloud there. US Nat Gas, we were bearish to clients this morning again, downside targets there. Coal looking strong at 124 and holding that break. And we've got some pretty big targets there for coal. Emissions, we went out as bullish. They're up 3% this morning. So that was quite key. We felt the cloud was just breaking. So we're seeing quite big upside targets there. And gas prices, of course, up a further 4-5% this morning. Now just waiting for these breaks of these key levels, and the same on MBP 200 was really the level that we needed to get through, and we're sitting right on it at the moment. The big story this morning from a chart perspective is German power. German power breaking this triangle level really, and we put out a report to clients on this morning, but it's breaking out of this triangle, really quite key, breaking to a new high, new upside targets, and we give those in the report. We've given all of the price targets and the levels that we're going to go to, stops that you need to use. So that's really quite key. This break, really important. That report's gone out in our news to clients this morning. So have a look at it. That's it for today. Until tomorrow, happy charting. See you then.